Q1, the consensus right now is for an earnings decline of 2.4%. We haven't seen an earnings decline in any quarter since the second quarter of 2016. That's when we actually did have an earnings recession, 4 quarters in a row of negative earnings growth. But as we look out to second, third, and fourth quarter of this year, we are actually looking for growth from S&P 500 earnings, even on top of those really impressive earnings numbers that we got last year. Now, the big question is, and you said it, it's Q2 guidance and what guidance will be for the rest of the year. That is what the market is going to hang their hat on when we get into April later next week and we start getting earnings reports from these companies. We want to know what consensus or what corporate management teams are thinking that Q2 is going to be like. And my guess is they're going to be pretty conservative.
Michael, we'll pick up on that thought. Maybe I didn't express that quite correctly. It's not that companies are losing money. They're going to continue to make money. They're just not going to churn out profits as fast as we were accustomed to in the past.
Well, that's right, Tyler. And when we go back a year and we start getting into 2Q and 3Q and say, well, look, we had a big tax cut, and if those corporations didn't have to send that huge amount of money into the government, they got to show it as earnings on the bottom line, and that really boosted taxes. Well, we're starting to anniversary some of those numbers now, so the real earnings growth has got to come from what the company can actually sell. It's not so much a year-over-year comparison. Let's see what those top-line sales are looking like. Is McDonald's selling more hamburgers than they did in the first quarter or in this same quarter last year? Those top-line numbers, I think, are telling you whether we still have expanding growth and a positive economy. I think we do. I think all of the data, when you go to unemployment numbers and everything else, are showing the economy's growing. And, okay, so it's going to be a little bit slower. I don't understand all of the hand-wringing, all of the applying the back of the hand to the forehead and saying, alas.
You sound like a cautious bull, Michael. You sound like a cautious bull, which is what you usually are. But you're also saying get into defensive sectors of the market. Quick thought there before we bring Lindsey back in.
Yeah, I think that you've got to do that. This is no time to be taking risks. There's clearly something going on in the marketplace. So companies with good balance sheets, and I think, those companies with good cash flow that haven't participated as well, a lot of the value stocks. You're seeing consumer durables, consumer staples do well today. You're seeing the banks do well today. That's a shift. Pay attention if that continues in the second quarter, a little bit of flight to safety, and it actually makes good investment sense to me.